Infosys is potentially the top Nifty loser today. In pre-open, it's down close to about 5% after reporting a weak set of Q4 numbers on revenues and margins, both missing street expectations, and the company also guiding for just a 1 to 3% revenue growth next year. To talk more about the way forward, Abhishek Kumar, equity research analyst at JM Financial, is with us on the show now. Abhishek, morning. First, of course, your immediate thoughts on the Q4 numbers, and two, over the medium term, what's been the extent of EPS corrections that we've seen in Infosys, and juxtapose that with the 15% fall in the last 2 months in the stock price. Do you think we're closer to the bottom? When does Infosys bottom out in terms of valuations, and where are we right now?
Thanks for having me here. So first on Q4 numbers, clearly the numbers were bad, whether it is top line or margins. They kind of undershot the expectations. Even the guidance, 1 to 3% was slightly below street expectations. On the other hand, if you just, as you rightly said, if we juxtapose this with where the stock has been, stock has corrected over 15%. Since its recent peaks. We were already 6 to 7% below street expectation as far as the earnings are concerned. And our caution was based on the fact that the initial guidance for Infosys could disappoint the street's elevated expectation. Just to give you a context, most of the global guidance we have seen for the calendar year 24 have been similar or lower than the actual growth they did in calendar year 23. In that context, street's expectation of 4 to 5% higher growth for Infosys for FY25 had certain risks. So we were therefore a little cautious. Now, this 1 to 3%, while below street's expectation, looks realistic to us. I think a couple of reasons. One, management indicated that the seasonality in FY25 would be normal. That means H1 will be better than H2. That's a good sign. That tells you that the guidance is not based on some second half recovery, which is a hope, but on the actual deals in hand. That near-term bias gives some more confidence. And also the fact that if you look at even at the upper end of the guidance, the incremental revenue contribution for FY25 would be around $500 million. That's just mere 6% of the net new deals that Infosys won in FY24, which was above $9 billion. So there seems to be sufficient buffer built in for further discretionary runoff. So we find the guidance realistic, and it'll kind of align street's expectation with the actual reality on ground. So that in a way is a good thing. The stock might correct today, but I think the further downside from here seems limited. Just in terms of earnings, our earnings now are at 68 rupees. After today's fall, the stock could be at 20 times FY26, which is below its historical averages. So yeah, so in fact, we have upgraded the stock today, and we feel investors should buy the dips today.
You said stock is at 20 times forward multiple, FY26. What is the average? And what would your fair value be for Infosys now after the upgrade?
Yeah, so the 5-year median has been 23 times for Infosys. We continue to value it at 23 times. Our fair value is 1570, which is 10% up from here. And also we have to keep in mind that Infosys payout yield is 4%. So yeah, and if the stock opens gap up, the upside would be higher.
And between TCS and Infosys, where is the upside greater? Because TCS is calling out for higher growth next year compared to Infi.
Yes. So see, again, we have to, align these with the expectations. For TCS, the street expectation is still 8%, which we believe is slightly higher than what they will eventually deliver. So just in terms of upside, given the valuation gap, we see higher upside in Infosys over TCS.
Okay. And given that Infy is just guiding for a 1 to 3% growth, and there is a possibility that TCS will end with a growth rate lower than what consensus is, do you think it's time to lower the growth forecast for the entire sector, even the other companies which have not reported? And what could be the industry growth rate in FY25?
Yeah, I guess there will be correction in the growth rates across the board, especially large cap. And I think, as the global peers have guided, the growth of FY25 would be similar or slightly better than FY24. So yeah, I think the growth rates could range from anywhere between 0 to 5% across the top 5 players.
Okay, 0 to 5% could be the FY25 growth rate for the large cap IT names. Abhishek, thank you very much for joining in. Enjoy the rest of your day. 9:10